Let me turn the camera around. That was weird. Hello, everyone. It is our market update today. Let me invite Benjamin on. I hope everyone is having a fantastic week. I got sick, unfortunately. I don't know if it was the wedding or just a lot of sadness around losing our sweet boy Renly. Today's National Dog Day, so it's always really sad looking at pictures of him when he was little. Hello, Benjamin.
Hey.
Happy Tuesday.
Yes, happy Tuesday.
It is 2 o'clock on Tuesday, coming at you live with your two favorite people in real estate, Nykole Larson and Benjamin Larson, husband and wife team in lending and real estate. So we're going to talk about a lot of different things today. Some notes I wrote about HOAs, the dues in buying, and I made a video yesterday on the Puyallup real estate market. If you guys want information on your specific local market, let me know and I can send you that info. Or if you're looking for comparables on what your home is worth, reach out because we can do that for free as well. Okay, Ben, what's the dues in buying today?
The due today is please do notify your lender of any salary or wage changes. It's huge. Income is calculated differently on all programs. So if you're using overtime and you move from, you're getting overtime and your base salary is X, and you maybe changed positions inside the same company, and now you don't have overtime, if we were using that overtime to qualify you, then that income that we had for the overtime may not be able to be used any further. So if you're thinking of making changes to any portion of your income, obviously reducing for sure, communicate, but even if you're looking at getting a raise, sometimes bonuses and things of how they calculate over time can be calculated differently once you do make that change. So don't just do it without having communication with your lender.
I love that. Okay. One of the things I wanted to talk about, I saw an article about tech giants grabbing more money for AI and then not enough money for housing. And, everyone's waiting for the rates to go down because, they think what the market looks like and all of that stuff. Can you talk a little bit about where you think rates will go, and do you see an impact on AI affecting housing and funds and all that kind of stuff?
Where do I think rates will go? I do feel as the market tightens up on the mortgage back world, meaning debt to income ratios, programs, products, guidelines kind of tighten a little. I do foresee us in the future, these rates do coming back down. I don't know if we'll see a 4 in front of it. I really hope so. I wish I had a crystal ball, so I don't want to make predictions on the live here, but I do foresee these rates coming down in the next year, definitely. And I definitely see a lot of amazing opportunity with home buying and refinancing and debt consolidation and so many options to truly increase your wealth. As far as AI, wow is what I'll say. The research I've done myself, only so far is game changing. We don't know how it will affect unemployment in the future. I've read things and there's no credibility to it yet. It's more of just kind of guesses and that we may see, that upwards of 20, 30, even 40% of unemployment rates, which is mind-boggling, and then what happens to inflation and what goes on as that grows. If you don't have assets, that's as simple as even like crypto or, a high interest savings account or stocks or bonds or, wealth in real estate is the number one. as the inflation starts to go even further, and we do have that gap of separation from AI and things that we can't foretell in the future, kind of only speculate, it could truly separate wealthy and poor. And so I see that there's a lot of great things with AI coming, but I also fear a little bit about the unknown of kind of just staying stagnant. Those who have an opportunity today to buy a home should, because you don't know what's going to happen in the future. And this, I don't want to say it, but this may be one of the last first-time home buyer markets for a long time.
Mm-hmm.
If now,
Yeah, well, and we saw that. I mean, even the time from COVID fast forward, first time home buyer market was like 300, 350, 375. And that COVID in 1 year brought the first time home buyer market to 575, 500 pretty quickly. Now we are starting to see some homes come down in those lower price points the first time in a long time. Not as the best homes, but some, that can qualify. But really looking at, am I putting my investor hat on instead of going from what I'm renting towards what I'm buying? And I'm going to have to suck it up a little bit and have a little bit of less, right?
yep.
Usually that's typically what happens. You're going to have to take a step back to move forward, though. And instead of paying off someone else's mortgage, who can now rent it for cheaper, you can build into your wealth building journey and decide, am I going to rent this house out later? Would this be a good opportunity for that? Or am I going to sell it and take that equity and purchase my next one? And then is that a 5-year plan, a 3-year plan, a 10-year plan? What does that look like? And making sure that your lender and your real estate agent knows that, so that when you are looking at properties, it isn't just, I need a 3-bedroom, 2-bath with a fenced yard for my dog. It is a lot further big picture looking
Mm-hmm.
into that. Where are
Agreed.
you going with your family? Where is your family growing? Are you staying the same? Like all of that kind of stuff. It's not just about the 4 walls that we help out with or the money. This is much, much, much bigger. And you got to feel comfortable sharing those things with your real estate agent, or your real estate agent really needs to be asking that, as well as your lender, and what those long-term goals are.
That plays into what I'd like to talk about next. Is, you just said it, feeling comfortable sharing your future goals and needs and wants, and just how you're going to plan for your future with your professional, because there is a no pressure, right? You don't have to buy if now isn't the time. We're going to be very real and honest with you. But there is what's called, I call it a rent review, or a rent versus buy review. And what that is if you're currently renting, or you're living, at rent free, which some clients these days do still live with, family or friends, where they do not have a mortgage payment, and you then go look, you want to open up and turn on the light to find out, how can you accomplish that goal? What is the path or the roadmap to homeownership so you can start building wealth? It may be kind of scary, but you have to let yourself be vulnerable to open up, to know exactly what that looks like, and kind of share your wants and needs and goals of how you want to accomplish it, and look at not just the surface level of it, of, you're only paying $1,000 for rent now, and the new mortgage payment maybe $3,000. Sorry, can't do it. What does that look like as these rates come down over the next year or two? What does that look like as you continue to build equity and your income grows, and you build that wealth and equity in there, if you want to sell and take the next step? It's the next, second, and third steps in this that are key moving forward as AI comes out and as the world gets a little more scarier. And then you mentioned also, if you currently own a home, what does that process look like? It's budgeting and understanding and doing a mortgage review that is no pressure. It's free to look at your credit, your income, your assets, the equity you have, and how can you currently leverage what you have to not only accomplish your financial goals, but put yourself in the best possible position moving forward, so you don't look back and go, oh man, I wish I would have done this, or I wish I would have done this. I hear that a lot, like, I wish I would have bought a home back then, or I wish I would have done this. By just reviewing what you currently are at with a true professional, you will not have to say that in the future, because you'll be the person who did what you wished you would have done. And the debt load is ridiculously high. It's at an all-time high right now. And so one thing, if you do have lots of debt, I just did this again this morning, I'm going to stress the importance. Their mortgage was at 4.49. Okay. They had an FHA mortgage. So meaning they have mortgage insurance. So the actual combined interest rate was much higher, because mortgage insurance just goes to protect the mortgage. And they had plenty of equity to go ahead and refinance, but obviously the rates are looking higher. But they had about 45, 50,000 in total debt.
Yep.
2 car payments, a couple of high interest credit cards. Their rates on their autos were 8, 9%. Long story short, to sum it up, their combined debt load, their rate, was almost 9%. We are moving forward on a cash out refinance, and we are lowering that into the 6s to be able to help leverage their future, save them over $300 to $400 a month. They're not going to pay off because of equity, and we'll see when the appraisal comes back, but they may not be able to pay off their whole entire auto loan. So they'll be able to lower it though, and they're looking into possibly refinancing and saving even more money. So there are a lot of opportunities to trim off the fat of the interest that is currently bogging you down, so that you can make the right moves in the future. Just give us a call and we'll do a no cost, no pressure, free review of either your current rent situation and how to get to the next steps and create that roadmap for you, or what your next steps are if you currently own a home and you're bogged down by that weight of debt.
Absolutely. Absolutely. That plays a huge, I think people get lost in, the rates, but the overall debt and what that looks like, car payments, credit cards, all of that. And $300 to $400 a month savings may be those extra groceries that you couldn't afford, or, put it towards anything else. It really does make a big difference. I mean, $50 extra a month is amazing. So you just got to look at all those options. Would they be able to get their mortgage insurance cut as well?
So I don't want to go too far on this, but we took it an extra couple years out, like I was saying, peeling back that onion layer like 2 and 3 years down the road. And and I want to use the term if, because I don't have a crystal ball, these rates do go back into the 5s and 4s. The savings is well over $1,000. They do remove their mortgage insurance because their value is there now. And their goal, which he said he was never asked before, when he wanted to retire and what his plan was. He wants to stay in this house forever. This is his forever home, and that's not the case for everyone.
Yeah.
But this is because of the land and what he has, and it's a beautiful property. And he said his next goal was to try to pay this thing off. So we created a next step, which is once those rates do go down and we help him with the no cost refi plan and what we do, that we're going to save well over $200,000 in interest over the time, which is absolutely mind blowing compared to what he's looking at currently on his day-to-day bills and the payment, and going from a 4 to a higher rate and all that. It's going to relieve so much stress and truly help him get to his retirement financial goals.
Well, yeah, paying off credit cards, potential car loans, all of that helps as well, right?
Yeah,
Because
exactly.
then you're just consolidating it into that one thing. Did you have anything else you wanted to say
No,
on
that
that?
was it. I went further than I wanted to.
That's okay. So I wanted to talk a little bit about HOAs. I know this has come up a lot. They're saying 30% of homes in the United States have an HOA, and the increases are coming. They continue to increase, costs increase. The times of $10 a month for HOAs is not a thing anymore, right? You're really looking at sometimes $75 a month, sometimes $100 a month. I know in some areas in Puyallup, it's going to be $250 a month, and how that affects your buying power. Granted, some have pools, fitness centers, and all of that. But really, when you're looking at properties, you need to understand how HOA dues and what they're covering affect your purchase power. So, running through a scenario that Ben and I had with a client this last weekend, they're at the top of their budget. There's $96 a month for HOA dues. And how do you look into that and decide, just quickly, if a buyer was looking to determine if they can afford that home or not?
So something I do that's a rule of thumb that I help with my pre-approved buyers is every $10,000 in purchase power is about $80 a month in actual monthly payments. So if you owe $80 on a credit card, your power, if you paid that off, would go up by $10,000. So if your HOA dues were $96, then that would probably be, and I'd have to do the math, but you'd probably be looking at about 11, 12, maybe 12.5 in purchase power. So if you were approved for 500,000, you'd be approved for about $12,000 less based on the debt to income ratio from the homeowners association dues.
Got it. That makes sense. So how this affects buyers, obviously, but it also is something that when people are looking to sell their home, need to put into consideration when you're pricing properties, and your agent is going over comparables of X home, but outside of the HOA and they're looking, and you're comping it the same, that is going to affect the amount of buyers that drive into your home and are able to qualify versus the next one. And then making sure that the real estate agent, when you do have offers coming in as a listing agent, are you qualifying that as well with the lenders? Because that's going to play a part into, you don't want to get through that they're just pre-approved and come to find out, they really can't qualify for those HOA fees as well.
Yeah.
So,
And as the rates go up or go down, that 80 for 10,000 kind of scenario I said will change because it is based off an average. It's something you can do quickly that will make sure that, hey, yes, I can qualify for this, and go from there.
awesome. Absolutely. Well, that's all I had for you guys today. Little quick, 20-minute conversation of what's going on in the market. Message us if you guys have any questions. We do get some, so we appreciate it. The best way that you can support Ben and I is by sharing this video with someone that you feel could benefit from it, or even sending us their contact information of anyone that maybe just needs to have a conversation. It doesn't need to be a full-blown, we're giving keys to you tomorrow on your next house, but let's really look at that and see what your options are and put a plan for 2025 or 2026, whatever that looks like. Or even, sharing this on your public page and, sharing for support. So we always appreciate that so much. So enjoy the sunshine. Have a great day.
Yes, a couple more weeks of it. Take care.
Bye.